You didn't come this far just to stay broke. What if I told you that the key to wealth wasn't in your paycheck, your degree, or your network, but in how you think about opportunity? Right now, millions of young adults are trapped in a cycle. Earn, spend, repeat. We scroll past finance reels, we see success stories, and we tell ourselves, maybe someday. But here's the truth. Someday is a myth. Wealth is built today, in small, quiet decisions repeated over time. You clicked on this video not by accident, but because you feel that urge, the fire, the hunger to do more, to be more. But there's one powerful tool almost no one uses correctly, and that's the stock market. So here's what you're really here for. How do the rich use the stock market to build freedom, while the rest of us gamble and guess? The answers are simpler than you think, but they require a mindset shift. Let's dive into it. First, stop gambling. Start owning. First, let go of the idea that getting rich means trading stocks like a Wall Street movie montage. That's not investing. That's speculation. And speculation doesn't build generational wealth. Think of every share you buy not as a number, but as ownership. Ownership in companies creating value, solving problems, changing lives. Starbucks, Apple, Infosys. These aren't just ticker symbols. They're global machines pumping profits year after year. Buying stock is like buying a rental property, except instead of tenants, the company pays you in dividends, growth, and equity. But what if you don't know which companies to buy? That's where the secret weapon comes in. 2. Index funds, the hidden shortcut. Imagine a basket filled with the top 500 companies in the US, from Amazon to Microsoft. When you invest in an index fund, you're buying a piece of all of them. It's called passive investing, and it beats 90% of actively managed portfolios over time. You don't need spreadsheets. You don't need to time the market. You just need to start and keep going. Because let's be honest, your fantasy football strategy is probably more complicated than investing in an index fund. So how do you turn a simple monthly deposit into actual wealth? It starts with time and consistency. 3. The formula. Time into consistency into growth. This is the millionaire's formula, and almost nobody teaches it. The sooner you start investing, the more you give compound interest room to work its magic. Investing just 1,000 rupees a month from age 22 can grow into over 2 crore rupees by retirement, if placed in an index fund with steady growth. And for every year you wait, you lose tens of thousands in future wealth. You're not just missing money, you're robbing your future self. Imagine your 60-year-old self sipping coconut water in Bali, thanking 22-year-old you for skipping one weekend party. But consistency isn't just about investing. It's about staying invested, even when things look scary. 4. Panic is the enemy. Recessions are discounts. Here's where most people mess up. The market dips, social media panics, and they hit sell. What do the wealthy do? They buy more, quietly, smartly. Think of a recession like a Black Friday sale, but on companies. Apple doesn't stop innovating just because the market dropped, and yet its stock gets cheaper. The truth is, panic turns paper losses into real losses. If you sell in fear, you lock in pain. If you hold with clarity, you plant seeds for exponential growth. But how do you know what to buy and when to buy it? 5. The 80-20 strategy. Focus on what matters. 80% of your investment results come from 20% of your choices, which means you need to stop chasing trends and start focusing on fundamentals. Look for companies with consistent cash flow. Study their business model. Favor long-term performance over short-term hype. If your stock tip came from a YouTube comment section, maybe fact-check it before betting your future. So now you know where to put your money, but how do you make sure you actually do it? Every month? 6. Automate your wealth. Make it effortless. Discipline is unreliable. Systems are bulletproof. Set up auto investments through platforms like Grow, Zerodha, Robinhood, or Fidelity, depending on where you live. With automation, you invest while you sleep, while you binge watch your favorite series, while you forget you even had an investment plan. That's how wealth grows quietly and aggressively. The earlier you automate it, the faster you escape financial anxiety forever. But there's one final shift, and it's not financial, it's mental. Everything we just covered, from index funds to automation, works, but only if you show up consistently. Wealth isn't about what you flaunt. It's about what you own, understand, and control. The stock market isn't a magic trick. It's a mirror. The young adult who learns this today becomes the person their future family thanks tomorrow. You can work for money or let money quietly start working for you. And if your portfolio's down this week, remember, even billionaires have bad days. This video gave you the map, but before you sprint ahead, make sure you're not carrying financial baggage. Because step one to building wealth is not losing it. If you're committed to making smarter money moves, this channel is your go-to resource. Our last video, 5 financial mistakes to avoid in your 20s, laid out the most common traps that silently drain your financial potential. Consider that your foundation. This video, your game plan for growth.